Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. This article from Seeking Alpha is talking about people selling their silver now. But silver has been relatively low for several weeks now. This article was written 2 days ago. So I'm interested to see where this perspective is going. Once I read that title, I chuckled to myself because why would you be selling your silver now as it's cheaper when you could have been selling it at that $19.50 range? Now, he does come from the perspective of that, but also compares it to nowadays. And I think a lot of people have too much emotional attachment pegged to silver's price, and they are making irrational and very irrelevant decisions. Impulse buying and panic selling is one of the most dangerous things you can do in your stacking journey. I highly recommend being more patient and observing or taking the emotional attachment out so you can make more rational choices. But anyways, let's jump into this article. So from the last 3 days of May through September 4th, the price of silver rose from $19.65. This was a gain of $5.35 or 37%, which is really good. For precious metals, that is a nice rally. That is the potential, that's the opportunity that precious metals can give to yourself. It can definitely blow out of proportion really quick. It usually doesn't. It's usually more of an appreciating value, slower, but we did see these things obviously from several different things happening in the economy. But anyways, it goes on to say, the dollar is overextended to the downside. The more people begin to think it's time to trade their money. They bet on the dollar. So a too high price of silver begins to attract selling. Many dollar thinkers only buy gold and silver in the hopes of riding it to a higher price. Now that the price is rising, they see it as their chance to get the dollars out with less loss. And this is people, when he says many dollar thinkers, this is people that are pro fiat currency, that don't understand the main value of precious metals, and they're only in it to make a dollar, even though the dollar is collapsing due to hyperinflation. They don't care about that, or they're not educated or aware, whatever the case is. They're not investing into precious metals for the intrinsic value of the metal. They're investing into it for the dollars. But anyways, this week, the price of the metals fell further, with gold under $18 and silver under 73 cents. So on May 28th, the price of silver hit its $14.30 range, and from the last 3 days of May through September 4th, the price rose to $19.65, which is a huge correction or recovery. This gain was 37%. Congratulations to everyone who bought silver on May 28th and who sold it on September 4th. And to those who believe gold and silver are money, as we do, the rising price of silver may seem right as rain. Why shouldn't the dollar go down? It's rubbish currency, and any moment everyone else will realize it, and therefore it should go down in anticipation of that, right? It certainly went down during this period from 2.17 grams of silver, 6.1 or negative 26%. So what is the dollar worth? The question is, how much should go down, or how far should it go down? This is a non-trivial question. One cannot understand the value of the dollar in terms of quantity. We have written so much of the material on this topic, it could probably fill a book. Nor with the assertion often made in dark corners of the internet that the dollar is held up by faith, and as soon as the people that discover it is backed by nothing, it will go to its intrinsic value of zero. In reality, the dollar is held up by struggles of debtors who work overtime to produce goods and services to exchange dollars, which is definitely true, and that's a really deep perspective to put it at. But I like how he worded that, and I like how he brought that into reality, because it's definitely true. The dollar is held up by faith, and it's really backed by nothing, and eventually people are going to see the reality of the dollar, or the true value, the fundamental of the value of the dollar, which is zero. It really is held up by debt, and we're trying to get ourselves out of debt by replacing it with more debt, which never works. So the quantity of dollars is not a force pushing of its own value or down. It's any more than the quantity of gold pushes gold down. Money, and currency for that matter, has a massive stock to flows ratio. If it didn't, it wouldn't be the most marketable commodity or credit. The force pushing it down is the quality of new credit. As more and more credit is fed to the zombie corporations, as governments and individuals borrow more to consume, as more credit is counterfeit that is taken without means to intend to repay, the quality of the currency declines. It's natural. It is natural for money to bid less and less on a currency, the more and more questions there are about the quality of that currency. But how much less? What should the dollar be worth on any given day? Everyone may have his own opinion, but of course there isn't an example or a simple calculation that yields an undebatable number. This is one of the many flaws that the pseudo gold standard, where the central bank attempts to fix the price of gold. And pseudo stands for fake. So this is that fake gold standard where central banks trying to use gold as, a value. But anyway, there's room for disagreement. One market participant may believe that the dollar should be grown or should be worth 3 grams of silver. Another thinks 2 grams. A third thinks less than 1 gram. Who is right? We don't know. Either do they. This is the problem. They exacerbated the fact that people tend to extrapolate, and if the price has been falling, they tend to assume it will, and it should, and continue to fall, and they factor this into their idea of what it's worth. So not only does each participant not agree with others on the right price, his own valuation today goes or does not agree with his valuation from yesterday. So this is a lot of things to perspectives to look at. It shows how controversial it is. It shows how confusing the dollar is and really where it stands and how it really cannot push forwards in an economy to be successful. The dollar's never worked in any situation, ever. It never will. And I think that this article is it puts a great perspective on things to show that precious metals really are the value. It's the real money. The dollar is more than a promise or a faith, and we're trying to get ourselves out of debt by using credit and more debt to fix it, which is going to always decline. But anyways, the market price reflects the interactions of all these folks, and it is set by participants at the margin. If some long-term or long-time holders are selling one morning, then the price can move down. If that affects the value estimates of others and they sell, then the price can go down even more. The quality of the dollar may be falling steadily, and that's talking about speculation, or it may be falling in bursts, but relative stability in between. The valuation judgments of the gold and silver market participants can get ahead of or lag behind the quality of the dollar at any given moment. And they can trade based on momentum too. It is a common feature that when the price of something, example silver, is rising, the more traders pile into what they see as easy money, so momentum is practically guaranteed to overextend a price beyond the current valuation. So we're talking about if silver is $19.50 and everyone starts to buy it, there's a pretty good chance it's going to keep going higher because now people are starting to buy it more. It's getting traded in circulation and the markets are more popular. But anyways, he says, clearly this happened in 2011 when silver hit nearly $50, which means the dollar fell to about 633 milligrams of silver. Now, I'm not going to go over all this because it is really, it's a long article. Like I said, the link will be in the description if you want to check it out yourself, but it really is interesting. So, I'm going to go over some other stuff. So it goes on to talk about volatility. So this is important. So for these reasons and others, it is rare for a market to move in one direction monotonically. And when it does, so for a while, it can reverse sharply with vengeance. And this is why users of gold have to hedge their inventory if they are not obtaining the metal from a monetary metals lease. The price risk often grows as price is rising. Expectations that the dollar should move to 150 milligrams of silver is linear and promptly in the inverse of the way most people would say it. So is 200 an ounce, and that is naive. And even if the dollar has by now fallen to such low value, it would not be such a one-way move, and there is no reason for it to move that instantly. So that's definitely a really good point to make as well. Expectations couldn't move it, and if it did, people would say silver could be $200 an ounce, and that's its price. And I think it's definitely something that's not as speculative as people assume it is. I think cryptocurrency is more speculative, much more speculative than precious metals because there is a foundation. There's fundamental value in gold and silver. So this is talking about the Saudi oil bombing, and this is how it will affect prices. This is a really interesting part. I'm going to try to squeeze through it because the video is coming, I try to keep my videos around 11, 12 minutes, and there's still more to talk about. So this is talking about the Saudi oil bombing. So we don't normally comment on news that occurred after the week's close on Friday, but in this case, it is really big news, and, this is something we need to talk about. So, either Yemen or Iran, depending on who you ask, bombed half of Saudi oil processing capacity on Saturday. As we write this Sunday evening, Arizona time, the price of the West Texas Intermediate is up over 11%. So we are not geopolitical policy wonks, but this looks to us like a major event. Risk has just gone up, and perhaps a lot. S&P futures are down about 0.65%, and the price of gold and silver up 1.3%, respectively. Risk or rising risk means lower dollar, and we have to be clear what we mean here. Most people refuse to measure the dollar in terms of gold. Instead, they prefer to use their consumer goods. So the so-called purchasing power, or else the dollar would have derivatives such as euro and pound. So, however, a crisis like this shows that the irredeemable dollar and its irredeemable derivatives are all on the same boat. If there is a growing risk economy and if the dollar's falling, it would not be because the euro is rising or the franc or even the yen. So, this is this is a really bold statement too. The dollar against gold and likely silver. And I like how he says and likely silver as well, because silver and gold really are equivalent in value. I mean, it comes out of the ground 8-1. Most miners are focusing on gold by abandoning silver mines, and a lot of silver is lost in technology. A lot of gold is recycled from jewelry and stuff because it's more profitable. So I definitely think that silver needs to be taken more seriously, and I think it definitely is, and it will have its time. But you know, this article is really long. I definitely like it though. There's more points in it talking about zero interest. It goes on to say even more stuff. It shows some. So if you want to check it out, the link will be in the description. Like I said, it does bring a really good point to the table. A lot of good points, a lot of different opinions, perspectives, facts, and statistics, and also goes historically, showing back in 2011 what was happening and how it could affect prices today. Also correlating that with the dollar. So I definitely think this is a really strong article. One of the best I've read in a while. I'm curious about it. Do you guys think this is good or bad news? Where the dollar's headed and where silver's headed? Do you think that prices can recover sooner than later, and if so, at what rate? But anyways, I'm going to wrap this video up here. Like I said, link will be in the description if you want to check it out yourself. Make sure to smash that like button. I posted 2 other videos today, so go check those out as well. Actually 3 other videos. I posted one early morning as well, so go check those out as well. I know you guys are going to dig them. I'm talking about how to predict silver's price. I went over a little bit of silver selling, buying silver, some of the tips that go along with it as well. So anyways, thank you guys for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.